Hey guys, good morning, welcome to the live session of Stocks Never Trading. My name is Dave, guys, my partner is Ron. Let's get down to business here, guys.
In on US 30, sell, okay? I'm jumping in. Guys, that's a 100 pip drop. Yes, we caught it. Hey, guys, 200 pips, please, secure.
guys, good morning, welcome to the live session of Stocks Number Trading. My name is Dave, guys, my partner is Ron. Let's get down to business here, guys.
In on US 30, sell, okay? I'm jumping in. Guys, that's a 100 pip drop. Yes, we caught it. Hey, guys, 200 pips, please, secure.
Recording in progress.
Hey, welcome to Stock Sniper Trading. Thank you for joining. My name is Ron. My partner is Dave. Guys, we're going to have FOMC in just over an hour and 5 minutes at 2 p.m. Eastern. Please use proper risk management if you are deciding that you will be looking to take a trade this afternoon. It will be volatile, so please right now think about how much you're going to risk trading. Go over your weekly goal so far if you're there, or your daily goal, and all of these things. Please, guys, work out your own personal risk management, and don't do anything silly this afternoon, okay? So thanks everyone for joining. I apologize to everyone for being late. We were scheduled to start this call at noon, but I got delayed at my son's dentist appointment. He has braces, and they put these elastic bands in for the first time now, and it took a while to get into the appointment, and but we're here. So what we're going to do is we're going to speed up the time. We're not going to go through like all of the news and the earnings and like we normally do. We're going to get right into this. Hopefully you guys have done your homework and you guys know what's on deck with Forex Factory, who's got earnings today. There's no really big earnings in the after hours that we have to go over or anything like that, but hopefully you guys did your work. The big deal is going to be FOMC, and that's what we're going to get into, okay, guys? And we're going to do two top-down securities. We have enough time. We have about an hour to do this. I can speed it up, but we will 100% do gold. So let's just make this clear to everybody. So we're not spamming the chat. We will do gold. That's what we're going to start with. And I told the snipers in the Zoom that we will do also one index. Either S&P 500, NASDAQ, or Dow Jones, and we will do one of those, okay? We could do 3 total securities and have 2 index, but it might be too busy for some individuals, and so we'll do gold and one index. So again, guys, if you guys can let me know in the Zoom which one you guys agree to, I'm more than happy to do either or it doesn't matter to me, okay? Thanks everyone. So let's get started. So it is live FOMC session. Use proper risk management, okay? Just quickly, what we're going to go through is federal funds rate, 2 p.m. So last FOMC was 5%, the overnight lending rate, and they've forecasted a decrease of 0.25% to 4.75%. We'll see the actual number over here. I can see in UK, the British bank rate, they also were pretty similar to United States here with 5% previous. They were forecasting a decrease of 0.25%, and their actual result was 4.75. So they did in fact decrease 0.25% in UK, and we'll see if US will follow suit. So 0.25% is kind of baked in. We can see the forecast. We will see if there's anything different. Will it be 0.5%? Will we see actual 4.5%, and then they decreased it a additional 0.25%? That would move the markets and create more volatility than expected. What happens if they went opposite and something happened and their actual rate was back to 5% or 5.25%, and something different? That's what we got to pick up on. But more than likely, we will see a 0.25% decrease. That's what analysts are saying. About 96% right now is that's the analyst estimate. Okay. And then that's 2 o'clock. Okay, we will get these numbers that are released. Then 2:30, 30 minutes right after that, at the chair of FOMC, Jerome Powell, will be coming to the podium and speaking. Okay, Uncle Powell. He will wear his suit with his analysts are saying purple tie. About 92% are saying purple tie. You can also bet on what tie color he is wearing. There's betting today on everything available. Whatever your heart desires to bet on, it's available. You can even bet on the color of his suit. Long shot is he's wearing a hoodie. Long shot. That's if you want to make 200 to 1 on your money if he's wearing a hoodie. That would be something funny. So he will come out and talk about the actual federal fund rate, why they decided if they in fact decreased 0.25%. He'll talk about the labor market in the U.S. He'll talk about unemployment. He will talk about inflation. He will talk about general monetary policy, what affected the interest rate cut, and also forward guidance. He might talk about future FOMC, and we have the one final one this year in December. And he could also talk about going into 2025, what is going on with everything with inflation. Are they getting it to target? How is the labor market doing in the U.S.? All of these things, he'll answer these questions. So it's good. It's good if you don't listen to it now. After the call, when the markets are closed this evening, for about 30 minutes, listen to what he's saying. He's a very important person in the financial markets, so it's good to know who he is and what he's talking about. Okay, so we will see a little bit of volatility at 2 p.m. and we'll see volatility at 2:30 when he speaks, and then we go into 3 p.m. power hour, the last hour of the trading day. Okay, and then could see some volatility as well in there. Quickly, just earnings. I just want to show you after hours. Who is reporting after hours? Any big names? No big names. Block SQ. It's a pretty significant name. I would pay attention to this one right here at 410. DraftKings, not so much. So the big one will be SQ Block. It is a little tech in there. Okay, guys, so let's get started. Oh, just overall your news for the day. Okay, so BOC's Bank of Canada may need to move cautiously on rates after Trump win. We had news of Bell, Canadian Tire in Canada. What else is going on? You can go through here. Bitcoin, Trump media, Krispy Kreme are some stories to watch right now. Home prices rise 90% of U.S. metros. Manulife reports earnings up on Asia growth, says adding more AI tools. Manulife is an excellent security for dividend income. This is one of the top ones I own with Enbridge Gas. Okay, and then some Trump news. How is the overall market doing today? S&P is 0.7%. Dow is very stable, basically right at no move today, like only 37 points. NASDAQ is moving 1.4%. Russell is flat. Crude oil 0.75% right now, and gold futures are up 1%. Some key names moving right now. Ford, I was speaking about Ford yesterday. It's up 2% right now. SMCI, this is the one chip security that took a big hit. Roughly 50% in last week, and it's bouncing right now 10%. Okay, so let's get into the charts. Again, guys, please use proper risk management trading today. Okay, I'm not going to continue talking about that. You guys should know this. You guys are traders now. You guys should know that the name of the game is proper risk management. So welcome everyone in Zoom. Thanks guys for joining. I appreciate all of you guys. Sonia, good afternoon. I hope all is well. Promelo, Juanito, thank you. Vanita, thank you for joining. Efren, thank you for joining, bro. I appreciate you. Sakaza, welcome. Johnny Four Eyes, Gorda, thank you for joining. Mats, appreciate you. Thank you. T, Paula, welcome. Pedro. Okay, so I see what you guys are voting for in here. Mike, you're in Saudi and it's beautiful. Oh, enjoy it. Enjoy the nice weather. That's amazing. Carlos, 84 here in Cartagena, Colombia. Wow, beautiful, beautiful. I love warm weather. Raven, welcome. Carlos, welcome. Barry, welcome. Okay, guys, so we will get started with gold. We will do a top-down analysis. We'll talk a little bit about it. We'll get some levels, and we'll see how everything is moving, and then we'll add our index. Everyone on YouTube, thank you guys for joining as well. LJ, welcome. Tashi, thank you for joining. Hurst Horns, welcome. Frank, Sam, welcome. Maurice, thank you for joining. Hamidriza, welcome. Thank you, guys. Claudio, thank you for joining. You're amazing. Tony, thank you for joining. Welcome, guys. Okay, so it is 1 p.m., just over 1 p.m. Let's get into that. Yeah, Carlos, that was your joke, and I'm laughing. You're always making me laugh, Carlos. I appreciate you. Okay, guys, so gold. Okay, so let's now think about gold. Okay, so this has nothing to do with an index. This is a precious metal. So it moves different, it has its own volatility. So let's see how this thing has been moving. I'm on the daily. Each candlestick represents a daily time frame. So an entire day of trading, not 4 hours, not an hour, not 5 minutes, not a minute. It's an entire day of trading. Okay, so it gives us the bigger picture. And if we look at a multiple daily candles, we can see like a trend. Okay, so I hope you guys can all see that we were pushing up from here from 2,200. Then it started to stabilize right here, consolidate. Then we continued to make new highs, and then it pulled back, making higher lows. We made a new higher high up here, new all-time high, 2,500. Pull back, holding. Continue, new all-time high up here, 2,700. Pull back, maintaining support, depth of market increasing below us, structure being built, and then we continued right through there. There's our tweezer top all-time high around 2,800 in the futures, 2,790 here, and then we've had this push down, but we are coming back up today, and I can just visually see we're approaching 50% of that previous day's red candle. So Wednesday we had a lot of news in the market. Post-election was Tuesday night. The market reacted on Wednesday. Gold sold off a little bit, and we're coming right back up. So if I was naturally just looking at 50%, we're approaching the 50% level, right leading into FOMC in the next little bit. And guys, please watch yesterday's session if you guys can. We talked a lot about the importance of the golden zone, the 50% level, how to figure it out using the Fibonacci. Very, very simple process, and how the market is gravitated towards to come back into that zone. Okay, it's very important. So it's good to know. So let's just start identifying our obvious higher time frame levels that we can see, like our supply, our demand areas that are visually that we can see. So I'm going to mark our all-time high supply and those two bodies right there. I'm going to, since it's representing supply, I'm going to make the box red and stretch it into the future. Okay. That was established, so I know when we got up there around 2,800, they rejected it, and a big red candle came down. It came back up lower high, and then they really pushed it down. Another key critical level is kind of right over here, this area. So it's kind of exactly around 50% of yesterday's bearish candle, but we'll get there. One other level, like right over here, I can see where gold sold off a little bit, but then held and pivoted right back up. So there's good support right around this level. It's within 50% of Friday, September 20th body. So it's still holding bullish volume. So this entire area I would make as an area of demand. I would just flip it green, and I'm capturing the start of that ignited body where it pulled back into 50% right here. And if I stretch it backwards, I can see that it was resistance, resistance, resistance at one time. Then you got that big body right there, September 20 close above it. That's what made the zone green. And then I can see slowly 2 weeks, 3 weeks, it came back down and held and bounced back up. So let's take this into the future. Okay, have we came down all the way down into this green box yet? No. So this is an active pending box in the market that could still represent demand around 2600 if it gets down here. It could cut right through here and be like an impulse break. It could come back up with a wick and close above here, but this is a zone that I'm interested in watching to see what could happen. Okay. And one more, I can see right in here, there's a little zone in here. Like I'll show you right now how I would do it, like right here. This is a zone 2. Okay, and stretching it, you can see now if I made it red as of Wednesday, when it closed below there, if I made it red and I stretched it into the future, then I can see today's candle, the green volume is coming right into our red box here. So will it continue to maybe break out of here, break through this resistance, or will it start getting rejected and then start getting pushed back down? Okay, but that's how I kind of identify it. But if we are going to use our method from yesterday, let's do that for yesterday's candle. So if there's any new viewers that want a little refresher, what I would do is yesterday's candle, daily candle, has already printed. It's a pretty significant body with a lot of red volume. It's a different, like look at the size of it compared to Tuesday, look at the size of it compared to Monday. This is a relatively large candle with volume. So what I would do is place the Fibonacci from the opening price to the closing volume, and then let's see exactly, so we're not guessing, where 50% is, and maybe we can identify also our zone. Okay, so what I'm doing is I grab my Fibonacci tool, the top of the candle, bringing it down to where it closed. Okay, now I have my information that I need on the red candle. So 50% is right there, 0.5, $2,701.35. The white line, you see today's high, it hit right exactly 50% of yesterday's volume. But the zone can be up the next level, 382, and also our yellow line, the 618. So these three lines is where I can identify a zone. Please follow, guys, right here. See the zone? Okay. Now I have the zone. I don't just have the critical 50% level. And then if I look backwards, like when I do it there up to 50%. I bring it up to those bodies. See how it's where I would have had it up to there. But if I'm following yesterday's Fibonacci volume, I could have it exactly right there. So we identified it. We're trading right into it right now live. Let's bring it into the future for tomorrow, for next week, for next month, and bring it into the future. Okay, so you see how easy that is? That wasn't very complicated. Now we got our zone, and then we can follow our daily candle. Okay, so one point of interest that I really want is the 50%. So what I'm doing is I'm putting it overlapping the white line, 2,701, and it's going to be daily. So it's a yellow line. And I can write on it. Okay, so we can write on it, match the line yellow, and we can write that this is a daily point of interest. And it's representing currently resistance by just a few pips. Like you can see the wick that already got rejected up there, but we still have lots of volume that could naturally just break through this and come through. But right now, as we're speaking, it is a daily point of interest of resistance. Okay, and now what you can keep your Fibonacci, guys. If you like your Fibonacci levels, keep it. Okay, but I'm going to take it off and keep dissecting today's daily candle. So now that it helped me figure out exactly zone and 50%. Now what I can do is get rid of the Fibonacci tool, and it leaves me with my zone and my daily point of interest. Everyone understand that? Like, can I get a thumbs up that you guys understand that? Okay. I gotta keep track of time. It's almost 1:15, so I gotta speed it up a little bit. I'll do gold a little bit faster, but do you guys understand how we just identified that? Okay, everyone can do that, no issues. Okay, Fibonacci is a it's a trader's favorite tool. Okay, make sure you have this in your toolbox. All time frames, all securities, as long as there's a candle represented with volume, it really is beneficial to you and makes identifying areas, zones, support, resistance, how to set your stop loss, where a TP could be, very, very simplistic. Okay. Now, let's just really quickly talk about yesterday's red volume. Why did gold sell off? Well, we had a big event. We had the US presidential election on Tuesday, and then late Tuesday night, it was determined that Trump won, and then the market reacted Wednesday with a lot of selling pressure because there was strength on the US dollar, so gold sold off. And now let's make some sense of it. So what happened now? Where we closed with that red volume, we opened today, and it was initially bearish, where it was red, red, red. We took out the prior Wednesday's low and we came down into here. Okay, so I'm just going to identify with a purple line our low of the day, and then we can see exactly what our low of the day was. We can also write, just to clean up our charts and make them look presentable. This is our low of the day. Okay, low of the day, I can see it was 2,600 and around 42, 43 was our low of the day. Now I look, purple line, I look at the structure to the left. I see it's now, you see how it's 50% of Friday, October 11th volume, and it retested it the following Monday, and it also retested it the following Tuesday, and it held. And then that's where we got that next leg up. So we've retested this area and holding. If it breaks this purple line and comes down into here, I would identify some levels with these two bodies, and then I have my big green box as the higher time frame demand area that could basically hold the price of gold. But right now it's making a higher low from this point where it did touch our green demand box, so it is making a higher low. So naturally off the bottom, the depth of market is increasing. And then we came back up. Once we hit our low of the day, we came back to exactly where we closed the red candle and where we opened today. So that is another point of interest. I always talk about that. Wherever the candle closes and opens is also a very important time in time and sales. The candle closed and opened there for a specific reason. Then I look for gaps. Here, there's no gaps. It closed right there. It opened right there exactly around 26.58, 59. So again, this is a critical point of interest. I'm going to make it yellow. Yellow represents all of my daily point of interest, and then I just have a purple line, two purple lines for the high and low of the day. Again, so with this yellow line, let's label it quickly. I don't know if I'll have time to do this with gold, but with the index, but let's get kind of a template how we're going to do this. Okay, so yellow represents again daily POI, and I asked myself, is it support or resistance? The volume is variable. The volume is above us. So I can tell that this is a support area currently and could still hold support if the volume comes back down here. Okay, so daily point of interest of support. Like the price is all the way up here. If it comes down red, 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 I would expect the buyers to be in here and hold this position and try and bring it back up. Okay. Yes, this area may not hold, and the sellers may increase and push it down, and then that will fill our low wick and then approach our low of the day. Then when it gets to the low of the day, again, we analyze what will happen there. Will it hold the low of the day, or will it break even further and create a new low? We got to get there. It's all there in stages. Now, when we came back up from the low of the day, we came back to where we opened. There could have been sellers there today and pushed those buyers down. It's kind of like a retest of the opening price. But the buyers, that were strong, and they kept pushing gold all the way up, all the way up, all the way up, and it came right there to exactly around 50%. We used our Fibonacci tool and we placed the line right there into 50% of yesterday's red big volume based candle, and that's where they closed the door so far, and they pushed it down. Okay, so not only is this yellow line our 50%, but it's also our high of the day. Okay, so you can clearly see it. Do I need to change this line to purple? If we want, we can. Okay, so not only is it a daily point of interest of resistance, this is actually also our high of the day. So this line is, I can put slash high of the day. So see how critical that 50% level is from yesterday's volume. It's a daily point of interest, and it's also our high of the day. And what happened when we got up there? There was a little bit of resistance pushing it down, but still we have a big full body candle. Now, if I'm looking at the current volume right now, opening price and where the green volume is, if I was naturally just looking with my eyes, 50% would be right around here, 26.77. But let's be automatic today. Let's bring out our Fibonacci tool from the opening green body, bring it all the way up to where we are. Yes, this is fluctuating as I'm speaking, but I can still, there it is, 0.5. Remember I said just by looking at it, 26.77, and now I get it decimal 29. So there is my point of interest. Look at what I'm doing. At the 0.5, I'm placing a yellow line overlapping it, not purple. Purple represents high and low of the day. Yellow represents another daily point of interest. So if it comes down red, 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 I would expect buyers to step in right here. And then I can have a zone, if I like, of demand. Again, I go up to the next level above me, the 618. I bring it back down to right there. And you see how I can find now another minor green zone because I'm going up with today's fresh volume. I know it's still coming down red, but we've got to see if we can hold this position or if the sellers in fact break this. Okay, and if you find a zone, you can stretch it into the future if you like. If you want to keep today's fibs, you're welcome to. If you want to remove them and keep, so do you guys understand what I'm doing? Okay, the big red zone is up there. The buyers are struggling, but if it comes back down red, 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 I expect the buyers of today to be somewhere in around here to bid the price back up. If we lose this entire zone, then it's got a high probability we'll come back down to this yellow line, and if it can't hold there, high probability we'll test the low of the day. Okay, I can stretch this into the future if I like, and so we have 50% of today's volume. What happens in fact we haven't done anything above us? What happens if gold with FOMC gets more buying volume and breaks out of here? Well, our next area we will test is the top of the red box, 2,711 and 12. If we can break through there, where could we come up to? I can see a level like right over here. Those tweezer top high wicks, 2749, and it's also a beautiful psychological number, 2750. I can place a line at those exact, whoops, not that one. Sorry guys, I need this line right here, and you see how it's tweezer top highs. That's when they pushed it down, that big red candle, and then I can see kind of how it's lined up with just off a body and a body right over there. So I can now identify that as another daily point of interest, 2750. And up there, if it comes back up there, it will represent resistance. Okay, so this is also a daily POI of resistance up there. We'll see if the sellers can hold it down. So now I've got it all the way up there. But what happens if gold breaks out of here and cannot come all the way and retest this? This is a fairly big zone that I have right here. So from the top of the red box, from 2711 to come up to that yellow line, if I was looking at 50%, there it is, 2730. And I can see that there was retest in the past of 2730 and holding. So if I was using my naked eye like this, where did I say 2730? Okay, that's where I would place another line, but let's do it with the Fibonacci. Let's get exactly. So we're doing tape to tape reading. So from the yellow line to the top of this red box, you just simply grab your Fibonacci again, and we're going from this line down to there, and it will tell me exactly where is 50% right there, 27, 30, and 39 cents. That's where my eyeballs were looking at it. 27.30. You see, once you get used to doing this, it's going to become automatic. You don't need the Fibonacci tool. You might be off by a couple points here and there, but that's where you can give yourself a zone. So sometimes when I'm scalping really fast 1 minute candles and I don't have the opportunity to bring my Fibonacci tool every single 60 seconds, I eyeball 50%, and then I look at the previous bodies, what type of structure they made. I can see the structure right there, and then I can see that wick below me, and then that would be my zone right there, okay? And I would make that red going down. If I need to use the Fibonacci to figure out a zone up here and not just a line, exactly what I did with that Fib tool, from the yellow to the top of that red box, there's my 50, and then there's my zone, 618382. It shows you exactly how to place your zone right there to that white, right there. There's your zone. And then if you bring it back, you see exactly how I had it? From the body to the low wick. And then if I verify it with Fibonacci, it's telling me the same thing. That's how I learned how to do this freestyle, because I was using Fibonacci as a template, and then I started to see price action does this every single time. And it didn't just start last year, 2 years ago. I back tested this for you guys for 20 plus years, and it still works. I'm telling you, price action does not lie. It doesn't lie. It's not that the volume wants to go here for an apparent. It's just the psychological key critical levels. It's just a natural path for volume where it needs to retest. I don't know how to explain it. It's just laws of like philosophy of volume. It's just a natural path. It's a natural occurring path. If Fibonacci is natural mathematical permutations, it happens in everything around the world. If you look at a turtle's shell, sorry to get off topic, but the structure of a turtle's shell is, if you put the Fibonacci, it's sequenced perfectly, the way how it curves and everything. It's just a natural part of life. So why would the stock market be any different? It's all about numbers. And levels. Okay, so we've identified 2730. If it breaks through this, it could. This is the next area of resistance it will attempt before it will come up to there. Then if it breaks there, the bottom of our all-time high supply box. If it keeps going, the top of our all-time high supply. Then from there, price discovery. Then we got to do our psychological analysis up there. You could also use Fibonacci extensions to figure out what could happen up there. Like the Fibonacci, this is the Fibonacci retracement tool, but then you can add a Fibonacci extension tool and help you understand that. So let's just label this quickly. This yellow line is also a daily POI, and it's daily point of resistance. And the beauty about this is, once you do your analysis, like, you can leave these levels on your chart for entire week, entire month. The volume will come to these levels and trade off these levels. So I just delete everything every single day with you guys to start fresh. But if I wasn't trading with you guys, that's it. There's my analysis of gold. I would leave it like this all this week, next week, and then I would watch the lower time frame volume, how it reacts at these levels. You can bring it down to the 4 hour, you can bring it down to the hourly, 30 minute, 15 minute, 5 minute, 3 minute, 1 minute, whatever your trading style is. You watch how it reacts at these levels. Okay. Now I'm going to get off the daily. That's enough information. We've already dissected that for, oh wow, okay, so it's 1:30. So Ron needs to start moving. And now in the hourly. So now what I'm looking at is maybe the past few days at the individual hourly increments. How has it been trading? I can see where it made the low of the day, Wednesday, futures market open, 20 military time, and then since then it's been pushing up. We got some good volume right here at 7 a.m. this morning. Comex 8 a.m. continued push. Wall Street 9 a.m. 10 a.m. Then we kind of found our wall up there. It got rejected. It came back down. 11 a.m. back up. Came back up and going back down. So it's consolidating. Green, red, leading into FOMC. Also, hourly candles, they have structure. See this green candle? Most of the volume now is above 50%. So you can use your Fibonacci tool on individual candlesticks as well. So here was an opening price, closing price on the hour. You got your Fibonacci tool from the bottom to the top. And now I know exactly my hourly 50% right there, 26.95. I can get my hourly zone as well if I'm trading hourly or smaller time frames right there, and there's my hourly zone. Okay, and now I can see how my hourly zone is holding. Like, let's get rid of the Fibonacci, and now there's the hourly zone. It did break right there. It came red, but remember, wicks do the damage. The body where it closes tells the story. The buyers brought it right back up, and look at where it closed. It closed within that green box, within 50% of that hourly candle right there. The next candle opened red, came down red, right there at the top of the green box and went back up. Look at the retest right now at 1 p.m. when we started the call. It came red at the top of our green box and going back up. So this, we can stretch it into the future, into FOMC, power hour, and later tonight. So far now we can see hourly support structure is building depth of market. Okay. And then if I was kind of scalping from the bottom down to here, like on 5-minute or 1-minute candles, if it breaks from right here, the bottom of the green box, and comes back down to the top of this right here, I measure it. Now, my second favorite tool is this, my measuring tape. Fibonacci tool is my number 1 tool. Number 2 tool is this one. Now I can measure exactly, if it breaks from right there, comes down like this wick did, it's approximately 32 pips. So then, if I take that scalp, on the lowest time frames, on the 1-minute, 2-minute, 3-minute, or 5-minute, if it comes down there and fills, I have to be disciplined enough to understand that it could come down there and go right back up. But if I'm up 30 pips, then my risk management, like a robot, is I take my stop loss to break even. Maybe I'll take out 80% when it comes down there. Maybe I'll trail it down with a stop loss. But, I follow these zones very robotically. Okay, and then you see it's still holding, but we got to flip this red bar. This might turn into a bullish pin bar on the hourly, maybe hammer candle, ready to break our purple high of the day. And now I can see the hourly structure inside this big red box. Here is the previous green candle where it opened right here, Wednesday at 7 a.m. It went green, cut through this red, and then got rejected down. So right there where it got rejected and 2 bodies, I can see an hourly structure right here. Look, right there. See that? How I got those 2 bodies where open, close, and that wick? I could make this red on the hourly and stretch it into where we're possibly going to be trading. So you see how I'm doing my hourly now structure inside that big red box? Because there's a depth of market within this bigger red zone that's being formulated on a lower time frame. And then I can find I can use a white line and find hourly levels if I need to. If it breaks from here and comes all the way, will it come all the way, fill up to that daily area? No, because there's some hourly structure over here that I could dissect. How could I identify that? I could do it mainly by just looking at candles. Okay, like right there. It closed and it opened. I use white line for hourly. Right here, I can look in the past how it kind of reacted when it came down there. The hourly broke that white line, dropped, but no volume closed down there. They grabbed the volume, they grabbed the liquidity, and then it started going right back up. This could be where it comes up green, and stops right there. This could be hourly resistance that pushes it down before it can get up to that daily. And then you see naturally, look at what I'm doing, guys. From the top of this red box to that yellow line, around, I'm going to say 50% is that white line. Let's use the Fibonacci tool to tell us exactly. So if it's green and breaks all the way up, if I measure it to that, where's 50%? 50 is right there, 27.20. So I was off by just a few points. So where I placed it, if I use the Fibonacci exactly from that zone to that, it would be right there. Okay, but I just kind of gravitate towards the bodies. Okay, so you can see how we can exactly identify where's hourly. White line 2720. Let's label it. Remember, white color represents hourly structure. So white is 1H, point of interest, resistance on the hour. Okay, so we can see how we're moving now on the hourly. So the big drop, naturally it's retracing right back up to 50%. Now, a few things can happen here. It could continue to go back down. Okay, it could come down here and then maybe find buyers and go back up. It could come down here and break below here. Then we got to change this entire zone to red. It will come back up green, get in here, and then go back down. Okay, it could just grab that volume, and then as it's coming in the green box, maybe it does red box. It doesn't get rejected. It breaks through here, and then that green box is still support, comes back down, and then builds something like this. Okay, so we have to determine what it could do here by each individual candlestick. But right now we're trading in a zone of supply. So we'll see FOMC, what it does here. Will it break it out further, bullish? Will it bring it down a little bit? But as it's coming down, is it going to be huge red? It might. With this type of FOMC, anything is possible. But on a normal trading day, it would naturally retest each one of these areas. Okay, so that's enough hourly structure. I can see right now, if I just go back last few hours, I can see it's consolidating. Green, red, green. It came down red, going back up. Will it come back down? Will it go back, break through here? Now we're going to stick on the 5 minutes for FOMC. So we're going to watch 5 minutes. Okay, so we have all of our levels now. Okay, we've got all of our levels. These are the 5 minutes for scalpers, how it's coming up. Approached the high of the day, it kind of brought it right back down, tested here, held, came back up, holding the green box, go back up, try again to take out that high of the day, failed, came back down. But you see now how it's not trading in the green box, it's trading right at it. So the depth of market on the low time frames on the 5 minutes is building a little bit. It's going to try one more leg up again to try and take out this daily point of interest resistance and the high of the day. If it fails, it could come down there. Remember what I was saying below the green box and come down there was that 30 pip scalp? So this is what I was talking about. Now you can visually see it on the 5 minutes. If it breaks down there and comes in there, there's that 32 pips. Just like right here. See here, here's a perfect example. See how the red candle on the 5 minutes closed below. That gave us confirmation that we can change the green box to red. We assume the next candle is coming up green, which it did. Green, 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 and then it retested it and got rejected. And then that's where it broke down. And it came down, right down to there, and then got bought up, and then a big ignited engulfing 5 minute candle brought it right back up. So we could break down there. If it breaks further, where could it go? It could go down to there. There's 5 minute structure right there. I can see a 5 minute zone that was kind of created right over there. If I brought that into the future, I would know that if it came down there, coming down in there, and I'm up 70 pips, that's where it could reverse and go back up. If it cannot hold there, then right down there. Okay, I go down level by level by level, even the 5 minutes. Okay, if you can't visually see the structure with the candlesticks, you have your zones now. You got your tape. You're reading the tape from the bottom of this red line to the top of this green. You see this black part of the chart. If I was just to guess, where's 50%? 50% is probably right around there, right? But let's not guess. Let's use our Fibonacci tool if we have time. From the red to the top of the green, there's exactly 50%. There's my red line with my eyes. There's the actual mathematical 100%, 50% level right there. Okay? And you can do the same thing. Look at the zone now. Look at how you can train your eyes to see this. There's your 5 minute zone right there. Remember what I said, how I could identify it with the structure right there? Now back test it. There it is. Okay? It's kind of right in there. I go with the top of the body and where the bodies are. So mine is a little bit different. My zone would have been right there, and I bring it up to there. Okay, so you can see I'm a little bit above it, I'm a little bit below it, but you don't need to guess when you have a Fibonacci tool. Very, very simplistic. Okay, So this is going to be, I'm going to keep this red line here, and I'm just going to label it for us so we know what this is representing. So it's red line. This is a 5-minute point of interest of support if it comes down here. But with today's volume FOMC, it could break right through these levels but on a normal trading day, we would see how it would react at these levels. Okay, so that is gold, guys. I'm going to let it continue just doing what it's doing. Let me provide you guys with this chart. And have you guys decided now, US 30 or NASDAQ? Please let me know so we can go quickly because it is 1:38. I got to get this done in about 15 minutes. I've provided I see Dow. I see a NASDAQ. Oh, it's 50-50, guys. 50-50. We're at that psychological level, 50% with NASDAQ and Dow. Just which one do you guys think is trading better? Which one? NASDAQ. Let's do NASDAQ. Okay, we'll stick with NASDAQ. Let's do NASDAQ. Tech is moving today. Let's stick with NASDAQ. I know I love Dow, guys, and I wouldn't. Dow would be my choice, but let's appeal to the masses. Let's see what NASDAQ is doing. Okay. So you also have the TradingView link of gold. Guys on YouTube, did you guys understand that? Okay, I took my time. I almost took 40 minutes explaining that. Now I'm going to go a little bit faster with NASDAQ. Okay, so what we're going to do is side by side. We're going to leave gold over here to the left, and we're going to do NASDAQ right over here now. Okay, so we're going to start from the top. Deku, are you longing NASDAQ? I'm bringing up the chart right now. We have to analyze. I don't know if I'm going to go long. I don't know if I'm going to go short. I don't know if I'm going to sit and do nothing. I have no idea. I haven't analyzed nothing. So it's very, very difficult for me to tell you that I'm interested in buying or selling. I have no idea. Let's let the volume talk, and then maybe we'll decide. Okay, so this is NASDAQ on the daily. I'm going to go faster, guys. Okay. So key, critical, obvious zones that we can see with the naked eye, that there's no debate. I'm going to say right here was demand. That red candle broke it, made it red there. It came back green. That red candle made it red again. Sorry, I'm not changing the box red and green as I'm talking because it's going to take up too much time. But I'm still with the same zone and I'm just explaining it. It's green now. Okay, you can see with that green body candle. Let's extend it to the future. So I can see that this zone is still holding. We're not there yet. Look at where we are. These are 3 soldiers. Like these candles are called 3 soldiers right now on the daily. These are very powerful daily candles where they haven't even basically pulled back to 50%. They're closing at the high. There's a very tiny pullback that explodes and then causes that firecracker to continue. Again, we closed at the high, very small pullback and continue to break out. So these are a prime example of what 3 soldiers are, bullish soldiers, and the opposite is the 3 crows, if it was like 3 red selling days. But these are very powerful. So if you're trying to sell this, it's difficult. It's not easy. You're encountering a lot of drawdown. Maybe FOMC might have the ability to push this down, but right now very strong. So remember this July, mid-July, that was NASDAQ's previous all-time high right here. Okay, now can I bring it down with some structure? I'm 50% of that green candle. If I make this zone red, which was a previous area of supply, we came in there, that was the all-time high, and then it pushed down. If I stretch this into the future, did we ever come back and trade up here? We came very, very close here in October, mid-October. We actually traded into it end of October, and in the new month of November, they sold it back down. So this is a zone. And you see now, look at where we closed yesterday. We closed right above it. Okay, it pulled back. So this is naturally a green zone. So I'm bringing it into the future. Okay, so we're getting our levels. Now, this is, NASDAQ has never traded up here. This is all price discovery. This is all-time high, new structure. So this is where you got to use either your Fibonacci extension tool or psychological levels to figure this out. Okay, do we have another zone below us? Yes, we do have a zone, mid-zone below us. Look, you can see structure, how it was resistance right over there. Resistance, turn to support. All of a sudden, when we got green bars above us, and now what is it? Okay, if you brought it in, you see then where we kind of bottomed out here, it held down here. Held, retested it, and continued that 3-day, the soldiers right there. So we're still holding. Before we can come down to this big green box, we have test right here. There's also structure inside here. You can use your Fibonacci. If you can't understand how to read candlesticks or structure, I'm sure that you can do this. Bring your Fibonacci from the bottom of the green box right there, and there's 50% right there, 20,260. Place a yellow line right here, 20,260, and yellow. And now you found your daily point of interest. If it sells off, if it comes down in here, red, 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 maybe right there will be your first line of defense where buyers step in. If this doesn't hold, then this green zone will try. So right there, guys, I don't have time to continue to write what this is, okay? But we know that yellow is daily point of interest of support if it gets down here. Okay? So following off, and then I can see exactly, now I'm back testing like backwards. I can see the daily candle closed above that point of interest, and look at the retest right at that yellow line and go back up. I could have guessed where this area was, but we used the Fibonacci. If we wanted to figure out the zone, remember, we can do a zone as well. I'm just getting a line, a critical line to the exact decimal. If I want a zone, there's your zone. There's your 3 lines right there. Your 382, your 50, and your 618. There's your zone. And you could also have a zone inside there if you like. You know, it might not hit exactly the line. It might come down red, red, red and find a wick at the top of that box. It might come down to exactly the line. It might break and find a wick right there. But this entire structure, we have to give the benefit of the doubt to the buyers that they're in there with pending orders waiting to get filled. Okay, so now you figured a zone. Okay, so let's now just follow today's daily candle. Let's follow it. How did we close yesterday? So remember, Tuesday we had presidential election. This is Tuesday, and then Wednesday, and then today, continuing to move. The stock market is rallying right now. So we opened, we came down. That's our low of the day, 20,775. Purple line, low of the day. Again, I don't have time, guys, to label these, and I like that nice 25, 50, 75, 100, 125, those psychological 25. What is today's FOMC? 0.25%. It's a very psychological numbers. Here it is too, 20,775 held. Did we come into 50% of this green box? Like, even if I was looking at 50%, guys, this is getting to the point where it's like very technical. See right there, if I was just guessing from the entire green box, if I was guessing where it's half is right there, then I can see how a previous day's high came right in there and got rejected at 50% and went back down. So if it can't hold right here, maybe it will hold right here. But I'm going to remove that because I don't want to confuse us too much. Now we came back and we have another point of interest where we closed and where we opened, but we're so close down here that if I place a yellow line, it's only 30 points away from low of the day. With FOMC, it will probably break that and go lower. So right now we came back up to where we opened. The buyers broke the previous all-time high and came with all this big bullish volume too. That's our new all-time high and new daily high, 21,111 on this particular chart with FX over here. Okay, in futures it might be different. Remember how exchanges trade differently, but the volume-based candles should look very similar. Okay, so when we got up to the high of the day, this is where we are right now. We can now figure out where's 50% of today's daily volume right now. Like, if I was just using my naked eye, I would decide right there, 20,958. But let's not just guess today. Let's use our Fibonacci tool. That's why it's there. From the opening price to where the volume is now. Again, it's fluctuating, but it can still give us a good idea of where's 50% right there. 20,948. What did I say? I said 20,958. I was off by 10 points. Okay, but let's not guess. let's place it right there. We'll make it yellow. Okay, if you want a daily zone, exactly, you can do this. There's your daily zone right there, if you want a daily zone. So now that we figured out where's 50% of the volume, right there. Okay, so if it comes down red, 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 I'd like to see if buyers could step in right here, around or that zone. If they can't, then it will maybe come push down and then attempt where the other point of interest, where it closed and where it opened, and then maybe try the low of the day. Okay, if the buyers are continuing pushing it up, we'll see if we can break out of here. Now, if it continues to break out bullish above here, where could we go? What time is it? 148. Okay, so now I look at the all-time high right now. It's showing us 21,110. What could be the next logical area? Go 100-point increments, like for the bigger move. 21,200 right there. Okay, if you're scalping on the lower time frame, this is how I would do it. Okay, now you got your purple and you could use a Fibonacci tool in there if you like. From the purple right there, you will know exactly where's 50% right there, 21,155. Okay, around that 150 area. So if we want, we could put one in there and see how it reacts when it gets there. So let's just do this one just for research purposes to see if it will come up here and test that. Okay, if you are scalping like on the really, really low time frames from 21,110, what I would do is the next 25 points. So what would it be? It would be 21,125. The next one would be 21,150 right there. So we're a little bit away from the exact 50%. And then what would be 150? Add 25 points, 75. 175. Okay, so you see I'm getting my little 5-minute levels for scalping, and then if I'm scalping, if it fills from the red line to the red line, I measure it, so then I know exactly like how many pips that could be. 25. If it gets up to that daily credit, 30 pips. If it can break a little further right up to there, that's 50 pips. But then I gotta understand that it could get pushed down there. And you see how it's 50% in between these yellow lines. I know it might be a little bit technical for everyone, but I'm trying to simplify this for everyone's specific time frames that they trade. Okay, could it go up more? Absolutely. I would go up 100 points. 21,200, 21,300, 21,400, 500. What would be the big zone where to have a big red block? It would be at 500, 1,000, 1,500, 2,000. You know those 500? So this big one, 21,500. Let's go up 525, argument's sake, to 21,500 and then down to 475. You know, like a margin of error. Okay, 25 points. That's where I would assume there's a huge block in the market waiting if it comes up there to short NASDAQ. Okay, and I'm just guessing. That's a pure guess. Okay, now let's go down to the hourly quickly. Okay, we got to really go fast now. Okay, down to the hourly. Look at the hourly. So again, if you're trying to short NASDAQ, there's just tiny, small pullbacks, counter, and that's it. Don't look at your RSI. Remember I told you this is a false signal. Remember I told you all week how it was up here, and then it just cooled it off, and look at it, then it spiked again, back up to 87. So anyone that tried to short this thing in this consolidation, look at what they did. They pumped the shit out of this at 9 a.m. this morning, 10 a.m., 11, and this is where we're trading right now. So can we get anything from this? Yeah, there's an hourly structure from the purple to the yellow, around 50% right there, 21,020. That could be hourly support if we do come down here, and we'll see if it will hold this white line. So yes, it is extremely overbought. Will it sell off during FOMC? Let's see. Okay, but we got to close below critical hourly volume. This one came down red, but then when we hit around 50% inside here, that zone, it went right back up. It came back down. It's retesting here now. We don't have a red hourly candle closing below any structure yet. Nothing. There's just small pullbacks going back up, small pullbacks going back up, and they keep squeezing short sellers. Like if you're you got to be very careful. Okay, do we have a consolidating zone now? Yes, we do. From our high of the day to like right here, this could be an entire zone of where we're consolidating right now. Will it stay in here this afternoon? I doubt it. It could break out a little further, or it could start to sell down below here. Let's go into the 5 minutes, and this is the 5-minute structure. Okay, so 5 minutes are bullish as well. Small pullbacks, and they're coming into 50% of that green candle, holding, going back up, coming back down, holding around 50% of this green candle, going back up, coming back down, holding right now. Okay, so I can see structure on the 5 minutes inside my hourly consolidated box. Where's the 5-minute structure? Train your eyes to see. There was structure right here, right there. It's still holding. Okay, this could be like a minor green 5-minute zone. If I'm looking to scalp below this thing, okay, see how it's still holding? If it goes from down, red down, all the way down to there, I measure it. So I know exactly if I'm taking that counter sell, it comes down there, 30 pips, down to the bottom is 42. The buyers could be waiting there and bring it right back up. So, but with today's volume, it's going to be a bigger move. Okay, so we've got it levels above us, we've got levels below us. Let's put these two side by side. Gold is coming back down. Okay, so couldn't get back to that high, the high of the day. They pushed it down, lower high, and they're pushing it down. That would be a nice little scalp right there. If you got those green candles, or sorry, those red candles coming down. If you're in any trades going into FOMC, prepare for a lot of volatility. Okay, so if anyone's joining us, on the left we have gold. We did a full, I think it was 30-40 minutes of analysis. On the right we have NASDAQ. I think we did 10-15 minutes of analysis. We do have some levels. These red lines are for research purposes. I want to see if it will tag up here. I know with FOMC volume, it could just, before we even breathe, like 10 seconds, it could be a massive green candle or it could be a massive red candle. There's nothing we can do about that. So what I'm going to do is I'm going to wait for the first 5-minute candle to close on either security to understand an overall maybe direction, to see how the volume is. Maybe if a green or red candle closes with good volume, we can figure out where is 50% of that candle. Otherwise, we're just guessing or taking impulse trades, or you believe in some bias. If the interest rates cut, what will that do to the US dollar? You have your own correlation. Then what will that do to a certain security or index that you're trading? If you have that type of bias, that's a different story. But if you're just gonna jump in because you see a green candle with no backstory or no analysis, then you're guessing. And remember, there will be trading at 2:30, at 3 p.m., 3:30, 4. There's trading tomorrow, and there's trading next week. You don't have to go overly crazy just because it's FOMC. This is just another event. It comes by once a month. We'll have the same conversation in December. NFPs are the same thing, first Friday of every month. CPIs, PPIs, GDP meetings, they're all the same. We go through the same cycle every single week and month. So it's going to be volatile. But understand that. So this is where you got to think right now about your risk. How much are you risking? Today, if you made your daily goal, are you risking your entire daily goal's profit on today's FOMC? Probably not a good idea. If you've made a certain percentage, maybe just use a little bit of percent that you have remaining. If you lose it, it's okay. We can live another day. You still protected some profit and you can walk away happy. That's the main goal of trading sessions, is to walk away happy. Not pissed off, not mad, not revenge trading. So I can say that I've hit my weekly goal with honesty. I'm saying I've hit my weekly goal. I don't need to trade today. I could just watch and observe. This is an important FOMC coming after our first presidential election. So it's very important to pick up on clues, not just to trade. Because I want to be trading next week. I want to trade next month. I want to trade next quarter. I want to be here trading next year and the year after that. So I got to preserve my capital, my profits as well. Okay, so timing 1:57, less than 3 minutes. We're going to see some fireworks. So please, guys, I'm going to say this one last time. Trade with your own proper risk management. Okay. I am not a financial advisor. I'm here for entertainment and education. Okay. If I look for a buy or sell, that's my own personal business. Has nothing to do with you. You make your own decision. Hopefully, we're all adults on these calls. This is finance, guys. This is the markets. Like it's ruthless. So please, don't over leverage on an event like this. I'm not. I've really scaled down how much I'm trading. Reese, what's going on? Hey, Ron, just an idea, but I think it would be a great to do a call about the different events and what you look for, research, etc. to help. Yes, absolutely. That was part of, Reese, what I'm doing is the super systems concepts of trading. I want to break down like an event like this, FOMC, and what everything entails and how it can affect the dollar and all of that, and do the same thing for an NFP, do a same big webinar for PPI. And just have everything. So then you just go in and look for it. If there's an FOMC NFP, you click on it. It might be an hour, 90-minute video, but it explains everything in depth. So I don't have to keep doing this on every single call. It'll all be there for you. It's in the process. I'm building it, but it's a big project I'm building. So it's going to take a while, but I want to build it together with you guys. I was going to pre-record them, but I find if we do it together, we learn more. You ask questions. They will be recorded. I know you can't make every single one of them, but they will be uploaded to the website. Okay, so that's the plan years for what we want to do to provide education for the next few years. Lifetime of education. Okay, and you trade what particular security you want. Gold is over here on the left. NASDAQ is over here. We've got 30 seconds. Okay. I'm right now going in, checking, make sure I have the appropriate lot size or contract so I don't do any silly mistakes. You're going to see volatility. You're going to see spreads on brokers. Increase, decrease. I can see right now my spread on gold is 5 pips. I'm normally less than 1. Gold really increased. NASDAQ 4 right now. I'm normally 0.8. Spreads are going crazy right now. Okay, even wow. Okay, here we go. Get ready, guys. Okay. So gold is building a little bit inside this box. NASDAQ is building bullish. Okay, so gold got rejected. Initially, did you see how it opened green, came up? Now it's filling back down, coming back up. I'm going to wait for the full 5-minute candle to close to make any decision, okay? Unless you want to play this volatility, you're welcome to. I'm going to wait for the first 5-minute candle to close. Yes, I know I might be missing out on a quick 30-second, 1-minute scalp, but with these spreads, it's not mathematically, it doesn't make sense, okay? See how they faked out the buyers, bringing it back down. The range, it came back down here, went back up. Same with NASDAQ right now, okay? So is this a candle that you want to be trading? Now I look at it and say, no, this is not a candle I want to be trading. Okay, so this is only the first minute and 15 seconds so far. Anyone see the numbers come out? Dan, thank you. 4.75, no surprise. Okay, so what happened was they in fact decreased 0.25 quarter basis point to 4.75. No surprise. Okay, so let's see how the market reacts to this. Let's see how everything. I see just some consolidation on NASDAQ, spin top candle. So these, I always tell you, are the shittiest candles to trade. So it's showing us. Gold made a move to the upside. They rejected it, made a move to the downside. It came back up, and then the volume is still pushing it down. Let's see if they can close it. Number one, can they close it below this green box? So far, very boring FOMC. We've seen fireworks before, where it's just huge candle off the charts. But this is still, if it wasn't even FOMC, this would just be like a regular spin top candle inside here. gold is actually making a move. So I can see that they pinned it. Okay, so maybe it's giving us a hint that they want to push it down, sell gold. But I want the candle to show me. Okay, now let's see it. Can it take out that low right there? You see that previous 5-minute wick? Is it going to be a tweezer bottom low at 26.90? Is it going to be a higher low at my red box? Are they going to break it down? Will it come back up? I'm already looking at the volume. Where is about 50% of that? If it closes, then if it comes back up green, maybe gets rejected at 50%, then maybe I can sell the next candle coming down. So now we have 1 minute and 50 seconds to go. NASDAQ is flat. It's not even moving. Ethan, am I short? I'm not in anything right now, Ethan. I'm not in anything. I'm in no trade right now. I'm still watching and observing. Same for Dow, flat. Thank you, Nigel. Okay, so now we got 60 seconds to go into the close of the final 5 minutes. Okay, so we can clearly see that this looks like it's a double top. Okay, let's just walk it through where it came up right there near the high of the day. There's our neckline. It came back up here, and now they're coming back down, just like a traditional M. So can we push where it is? Can we close it below there? If it comes back up, will they reject it? Then can we start to come down here on gold? Okay. So what I'm going to do is, with this green zone, since we're only 45 seconds away and we're all the way down here, I'm going to start to change the color of this to represent that if we come back up green, 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 this zone is representing offers. It's representing resistance. It's representing sellers, supply, whatever words you want to use. NASDAQ is representing a mixed candle, no information. Okay, so you cannot trade based off of that. This one is tradable, gold. It's got a lot of red volume now. They took out the low. Let's see how it closes. Get ready for maybe an ignited red candle to push down. But I'm going to use my Fibonacci tool where it opened really quickly. Guys, I got to do this quickly. Okay, where's 50%? Right there. I'm going to draw it with a white line just so we can see exactly. Right there. Okay, so it's an ignited candle with no wick. It is dropping. Okay, so if we come back up to 50% of the volume, it's right here below our supply box. It closed right at the low. It opened, ignited, and pushed down. Now they're coming up. So let's see the retest. It's retesting right here. Okay, if it now maybe 50% the white line. See how it's coming back up green, green, green? Okay, let's see now how it reacts in this red zone. Will the sellers be there to absorb those buyers of gold and push them down? Or are the buyers going to continue to try and attempt up here? Okay, so right away when it broke down here, the buyers answered. They came right back in. Okay, and NASDAQ is still kind of really, really tight consolidating in this flag. But did you see how that took me a while to pull out my Fibonacci tool and do all that? Where I could have just eyeballed open, close, and like looked at 50% right in there. Okay, so now it came up. Did it touch exactly 50%? No, but what it did is it touched that zone. Remember what I didn't do here? I didn't put my zone. Okay, so again with the Fibonacci, I'm doing this live during FOMC. Okay, right there. Now where was that zone again? Remember what I said? What I taught? Go to your point 0.5, your 382, like right here, down to there. There's your zone. So now we're trading in the zone. Okay, and now it's coming big up, big bullish to attempt to there. So we touched now 50%. So it's coming back up. Now they're pushing it back down. Yeah, good observation, Efrain. They could be waiting for Powell to speak, to come to the podium. Right now is just initial reaction. Nothing crazy. Like NASDAQ, absolutely no movement. The only movement we saw was gold move from 26.95 down to 26.89, 50, 60 pips. That's nothing for FOMC for gold. But it's coming right back up, pushing right back down. Will they exhaust those buyers and close it down here and then maybe have that next leg pushing down? Or will the buyers of gold bring it right back up and then all of a sudden it's coming back up to the high of the day? In the first 5 minutes of the US dollar, sorry, I'm looking at another monitor with US dollar, it had that big bullish candle and then open bearish and coming right back down. So everything is retesting right now. Retesting. Salim, where to put a stop loss on gold? I am not in a gold trade. I don't know, guys, how we cannot understand what I'm saying here. I'm not in a gold trade. I'm just analyzing what's going on right now. If you took a trade and you're asking where to put the stop loss, that's a big question. I have no idea. I don't even know where you got entered. So I can't just guess where to place a stop loss. Use structure. I tried to teach you as easy as we could do it with the Fibonacci. It shows you your zones, shows you levels. You can base your stop loss off of that. Okay, so look now, we actually traded into that white 50% line and they rejected it, but it's still coming back up. So is this going to be a fake out of down here? So you see how it came down red and then coming back up green? Maybe this is a fake out down here. Maybe they faked out the market down here and could come back up. I don't know. I don't see really any kind of direction on either security right now. Still pretty choppy, but I am understanding that it's coming up here. That was strong candle, and the sellers are still pushing it down. Oh, amazing, guys. Look at that. Let's smash the like snipers. The 300 like will get a free 1-month membership with SST. There we go. If anyone wants a free month at SST, whoever gets that 300 like will win it. Okay, so where did we close? What happened? It came up, closed right there. We still have a little bit of bullish momentum. Let's see if the sellers can take this down. I study candles and I observe them individually. So I'm already looking at 50% of this green candle at 26.90 to see if it can hold. Sometimes I don't even need to use lines. I can visually see exactly what I'm looking for. 90% of the time I'm not trading on YouTube or with I'm trading by myself, so I don't need to educate myself on what I'm looking for. I'm really dialed in on the volume and I'm watching it. But I love trading with you guys. Don't get that wrong. But sometimes when you're trading alone, you know exactly what to look for and you don't have to talk about it. Okay, so we're coming down red. So red, green, red. We're barcoding. Okay, so the market is still developing. You guys said it the best. Maybe the market is just trading sideways right now until Powell speaks. Okay, so like this, remember this big consolidated zone? That was our hourly zone. If I just go up to here, look at our 5-minute consolidation. Look how tight it is. Look at NASDAQ kind of coiling up in here now. Okay, so if this was any other day, this is shitty price action. If this was just a regular Thursday afternoon and we were trading together, I probably would not be in a trade right now. I'd be saying, guys, let's wait for something to happen above here or something to happen below here. Okay, you don't need to stress yourself out trading in here. Same with gold. Where's Papa? How far away are we from Papa? Another 15 minutes? Okay, so it came red, 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 picking back up, bullish. Now, okay, so it's approaching our white line. Now let's talk. Let's have a conversation. We're 2.5 minutes away from a new 15-minute candle. So if you look at your 15 is higher time frame structure, kind of cleans up the noise. Let's see that volume. Can the buyers bring it above and close it above that white point of interest line. Remember, that was 50% of the opening FOMC candle. Okay, so again, this is a point of interest. Can the buyers close it above this white line, or are the sellers still going to push the buyers down at this white line? This is where the battle is. 26, 92, 93 area. Okay, that will determine maybe in the next 15 minutes if gold is going to go up or if it's going to come down. Whoever wins this white line position. It's exactly like sports. It's two teams battling it out right here. The red team versus the green team. If the green team can manage to close it above here, then they might take momentum and have a high probability of coming back up here. If the sellers can continue to hold their ground and hold this, they have a high probability that maybe they can push it back down further. Okay, but you see how the battle is right here. And this is at the exact line. If you created a zone, you would have got the entire zone here. Okay, so the buyers are pushing it right back up with a minute and 10 seconds to go. I'm not even basically looking at NASDAQ because NASDAQ is barely even moving here. Gold is the only one moving. Is this going to be a V recovery? Like what I mean by that is that deep move that came down and then coming right back up like a V. Will it close above here? Will it hold this? And then all of a sudden it's doing this? That's a possibility. It's kind of like an inverted head and shoulder pattern. But let's see if it was a liquidity grab. Like, just because maybe I'm not in a trade doesn't mean I'm still not processing what's happening. I'm processing every single candlestick. If I was down on the 1 minutes, I would be processing everything individually, what's happening. But I've kind of slowed it down to the 5 minutes. If you're a 15-minute trader, this is what you got. Like, even a 15-minute trader, this is garbage. Like, it just came down here, it's coming right back up. But look at where it might close. Here it is in 10 seconds. Let's watch it on the 5 minutes. Here's the battleground right here, the white line. Here's the close, and it's a new 15-minute candle, and we're also 15 minutes away from Powell speaking. Okay, so they closed it right below the white line. We've opened, ignited, coming back up, but it needs to break these wicks. We've got a wick and a wick. Okay, can it break for a new high? It got rejected right there. That technically is a lower high and could not take out that wick. So now it's filling to potentially build and break out of here. Now we're trading in that zone. Okay, so maybe I want to see if I haven't seen any green volume close above the white line. It might be in fact this 5-minute candle. I know it started quickly, ignited and pushed for the first 30 seconds. But to be patient and wait for the entire close of this candle, I know it sucks. You got to wait another 4 minutes and this thing can take off without us. But still, if that happens, if it goes, I might get a pullback. I'm still going to identify where's 50% of the volume. Maybe it might need to come down and retest. You know, there's always opportunity. You don't have to feel like you're just missing out on every single candle. There's also little research that you got to do too. Figure out, okay, so it did make a new high, came to the red box, but then now they're pushing it back down. Okay, so if you bought, did you pip and dip? That's the question. Not a lot of people will pip and dip, and now they're back to break even or in drawdown. Okay, so again, look at where the volume is concentrated, right back to the battleground, to that white line. Yeah, it opened nice and came all the way back up there, but did you use your ruler and you measured your move from the white line to the bottom of that red box? I don't know if you did that, but that's only 14 pips. With shitty spreads right now, probably not the best risk to reward. So let's just wait for closing volume. And then understand what happened. It came back down there and the buyers are bidding up the candle again. So they're creating that green volume. And then it came back up there and they're pushing it back down. Okay, we're in a very, very tight area. NASDAQ is attempting to make a move to break out of here. Okay, so came down. Now, could it take out that previous high wick? That was right before FOMC started at 155. Will it make a new high? Will it get rejected? See, if you're looking at 50% of that candle right there at 205, it's still holding 50% here on NASDAQ. Again, gold is struggling right here. It's getting rejected. How many times have you seen it get rejected now? I'm counting 3 times. And look at where the volume is based, right at our white line again. Guys, I can't help if it's a boring FOMC, but I can't dictate that. All I can dictate is breaking down what's happening. Some FOMCs are fantastic. You know, there's good volume, they're building structure, and then there's FOMCs like this that are barely moving. Okay, look at the rejection now. Let's pick up clues. It came up there. How many buyers did it trap in there? And now they're bringing it right back down. Okay, will it close below the white line? Then the next candle, think about how many buyers they trapped up there. If it closes below here, I'm just trying to walk through and predict the candle. If it's a shooting star candle, I could and it closes below here, the next candle will either open red ignited and drop because it's already done its job. It's already trapped the buyers up there, or it could open and retest the white line, then get rejected. So I'm already thinking, playing out in my processing what's happening and to look for maybe a potential sell. But to those buyers up there, you went in on impulse with no volume closing, and there was only a 13 pip move up to there. So that's why sometimes if I'm scalping, I understand the laws of pip and dip. Not too many people understand that. Ephraim, come on, run, move the market. I know you can do it. I used to in my younger days. No, I'm joking. Ron is too old now. I can't move anything. I can barely move myself. I can barely move my legs to walk. Ron's getting too old. I can barely walk to go get the kids. The joint pain in the knees is hurting. Sucks getting old, guys. It sucks. I hate it. I wish we could stay young forever. Okay, and NASDAQ. Okay, it peeked its head up there and kind of, look at tweezer top highs, 21,115, and they rejected it. Okay, so those could be clues up there. That's telling us where there's a lot of selling pressure right up there. And we're right back in that consolidated box. I think with this, I'm going to wait. I'm thinking till Powell speaks, but I want you guys to know, look at that 50% level. Okay, it impulsively broke out, impulsively broke out, impulsively broke out, and the volume is below that white line. Okay, so nothing really significant has happened yet. Okay, now we're pushing down. I could potentially look to take a trade right now, but yeah, why not enter in a gold sell now, Raphael? It's up to you. Then just your time wise, in about 8-9 more minutes, Powell is gonna speak. So Powell could change the entire momentum of this. You know, so to me, it's just risky to enter a trade right now. Okay, so I'm going to be patient and I'm going to wait till 2:30 till Powell comes. Maybe the entire market will change with him. I kind of don't, yes, this could continue to sell down a little bit, but the risk to reward isn't there for me right now. If this was the setup as soon as it started FOMC and I had 20-25 minutes to trade it leading into Powell, Raphael, I probably would have gone with it. But right now, it's just a little high risk right before Powell can speak, and they might play games here. So I know it sucks and not what everyone wants to hear. Ron is waiting to trade and not in a trade. But I believe that we got to continue to follow how the market is moving and what's on deck. I don't want to get caught in a sell and then like this, Raphael. See, like for example, guys, listen, I'm not in a sell, but if I took a sell, yes, the market could come down leading into Powell. Then all of a sudden Powell comes and then it's a big green move coming back up. Okay, why not? Why don't we just watch the volume going into Powell? And let's watch this red candle. Will it close below structure leading into Powell? Will we get a proper retest when Powell comes? That's a different conversation we can have. So let's let the volume talk, and we don't need to basically talk. Let's let the volume talk. It's talking for NASDAQ. It came in there, tweezer top highs, and pushing right back down. But again, when Powell speaks, if you go in to sell now, Powell could come and shoot NASDAQ back up. So let's just wait. Will it close above here? Will it close below here? Same with gold. Now we know this white line, it's a good point of control. Okay, so I can write right here on the white line, I'll write this. Okay, this is an FOMC point of interest. This white line for the first 25 minutes, it is a point of interest. Every time the buyers come up here, they reject it back down. Buyers are trying, they reject it back down. Buyers tried there, they reject it back down. The volume is closing below this white line. Do we see any green volume closing above this white line yet? That's why it's an FOMC point of interest. This white line, 2,693 for gold. How did I find that line? Good question. It was the first big 5-minute red volume of FOMC, opening price to the closing price. We used our Fibonacci like this. Look, opening price. Now that it's happened, we can do this. Opening price, closing, right there. See the, or sort, oh my God, where did I place it? I placed it at the 382. Oh my goodness. See, Ron made a silly mistake because I don't use it too much. It should be right there. I apologize. I placed it at the 382, but what I can do to correct my mistake is I can make it the zone that I was talking about right there. I apologize, guys. Sorry. No one, that was my, I placed it at the 382 thinking that that was the 50%. I'm sorry. But still, the 382 held, you know, and that's our zone now. Okay. Oh, the price was moving when you placed that at 50%. Nigel, thank you for correcting me. Thank you. I appreciate that. But still, we're still good. It didn't really affect anything. Guys, I'm telling you, I don't use the Fibonacci tool too much. I eyeball things, so you know it's that's a common mistake. I got to get better at using my Fibonacci retracement. It's been a long time since I used it, but it is the best tool. I learned so much using. Okay, here we go, guys. Okay, now they're developing something. So it's red back down here, red. But we have so much kind of support structure. I want to see down here if this will break with Powell. We're 5 minutes away from Powell. So remember what the market might want to do. It wants to maybe trick us or do something to entice us to maybe bite. And then they fake us out. What about now? Look at structure being built. What about a double bottom? Look at this. Okay, now structure. One bottom right there. Now we know where our neckline is. Around this red box, the point of interest white line. We're coming right back down. Now, 4 minutes away from Powell, might be creating a second bottom or a higher low, guys. Let's just think about this. And then if it comes back up green with Powell and closes above here, we flip this red box green. This might be FOMC point of interest, come back. We get a nice fair value gap, retest, and then maybe buying gold. And then all of a sudden we're shooting up here. Okay, look at now the structure. Now I can see a double bottom being created in the first 30 minutes of FOMC. Now we need the volume push, Powell. Or he could kind of fake and then it drops and we sell below here. So just a lot going on, guys. This is a good FOMC for education. I'm being honest. It's a shitty FOMC for trading. It's horrible. Like NASDAQ hasn't done anything. Gold made some moves, but nothing real. This is a good FOMC, perfect for patience, for studying structure, for understanding 50% levels and Fibonacci levels, how they're still holding in a time of FOMC, and this is not your normal trading volume, and they're still upholding. Okay, so this is a good session, in my opinion, for education, for learning. These are invaluable sessions. I used to appreciate these when I was learning how to trade. Because if you always assume that every single FOMC session is going to be fireworks, and no, it takes. That's why I don't get excited about NFPs. I don't get excited for FOMCs. I don't get excited for anything. I get excited to watch what volume is doing. This to me is like a regular Thursday afternoon trading, and it could be a choppy Thursday afternoon. Okay, so we're 2.5 minutes away from Powell. Full transparency, I haven't even taken a trade. I haven't been excited about anything building to look for a trade. Not yet. But if you guys can hit the likes, the 300 person who hits the like will get a free membership at SST for a month. Okay, so we came up, look, green, 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 right into our red zone below that white line. And again, the sellers are pushing it down. So, and then last time we came down, look at these two wicks. They're tweezer bottom low wicks. 2,689 and 94 cents. See how they're equal bottom lows? So down here, the market is still holding. We have this indecision spin top shitty candle leading into Powell. So still not enough to base a trade off of. And the market could make a huge move right when Powell comes out. Sometimes when he's just walking to the podium and he coughs, the market will move just to know that he's alive, just to see Uncle Powell. Sometimes the market likes just to see him in his nice suit and his purple tie and his glasses and how his hair is done and everything. But we don't trade off of that. We don't trade based off of his tie or how his hair it looks today. I don't care if he has bedhead. I don't care if Powell comes out in a hoodie. I don't care if he has a suit or a tuxedo on. It makes no difference to me. I'm watching volume. I'm not watching Powell right now. That's why I ask you guys, what is he wearing? Because I don't care what he's wearing. He could come out in shorts and a t-shirt. I don't care. The volume is what matters. Purple ties buys. That's been the history. It would be hilarious if he came out with a hoodie. There is that one guy, he's a governor or a politician. He's a big guy. He wears a hoodie in Congress. And they're like, there's a dress code here. And he's like, since when? I don't know. No one told me that. Yeah, John Fetterman. That's his name, from Pennsylvania. Yeah, that guy is hilarious. He's in a bikini. No way. Powell is in a bikini. I think it's going to be bullish. Okay, so here we go. Sometimes it takes him a while to get out there, but ignited candle, green, green, green. Again, bottom of our red box, they rejected it. So I want to see, will it come down here and grab some more buyers here? Or is it just hanging out here? Oh man. Okay. NASDAQ making higher lows, but still, let's see what it can do. He just started. Okay. So just started. We got a big injection of green volume coming back up. This could be a higher low. So we might not come down to this green box. Depth of market could be building. Okay. We have to acknowledge it opened as an ignited bar. Okay. So let's make that clear right now. This 230 candle started very ignited, coming back up green, 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 attempting that FOMC point of interest, white line. We're trading in our red box zone. Will the sellers push it down? Will the buyers continue to push it above here? If they can close it above here, that would be a tremendous move. And then maybe we can look for a pullback to enter on a potential buy on gold. Okay, but let's wait for this candle to close, because they could easily bring it right back down. Unless you feel comfortable trading this setup or this candle, just use appropriate risk. That's all I'm saying. I have not taken a trade yet. You will know, I will verbally say what I'm doing. It's trading in our identified zone. So sometimes we got to allow it to play out here. See what happens. Purple tie. Okay, all jokes aside, about the purple tie, it's jokes, it's fun, but you see how the volume is right back to the point of interest. Okay, so now that's a good push. Ignited bar. Is it gonna? We got rejected 3 times here, but now we got Powell at the podium. 2 minutes to go. I think we can be patient enough to wait for 2 minutes to see where and how this candle will close. If it can take out that high, look at 50%. It's at our point of interest. Then what we'll do is we'll flip this red box. We won't change it. We'll flip it green. We have our point of interest and maybe a pullback. We'll get a pullback buy, and then we'll place our stop loss below here, and then we'll see if we can come trade through this bigger supply area and approach the high of the day. Okay, so let's just see if this plays out. NASDAQ is making a move too. Pushing. Let's see if it can close above here, and then we'll figure out 50% of NASDAQ. Okay, so ignited open, pushing, took out the previous high. Okay, some of you guys are studying market structure and all of that. It's taken out a previous high. It's created a new high, but it created this new momentarily short-term high in area of supply. Could push down. Where will it close? I'm getting ready to flip this red box green and continue to watch this FOMC point of interest if I get a pullback buy. 60 seconds to go. But very bullish answer at 2:30. And Powell came out at 2:30. Okay, so this is the response with Powell. I have no idea what he's saying right now because I'm not listening to it. I will listen to it after the call. Later this evening, I will listen to everything in detail. 30 seconds to go. I always say 30 seconds will show who has momentum going into the close. The buyers, the sellers. Okay, so nothing different with this candle. Okay, so I'm going to change the color of the box, assuming that it is going to close green. Okay, so I've just changed the color of the box. I still have my white line right there. So if it pulls back at the top of the green box, at the white line, or at the bottom of the green box, I know that this depth of market could potentially be now a lot of bids or where the buyers are waiting. Okay, so we opened ignited. It could open ignited, take out this wick and go. Do you want to wait for a possible pullback? This is the toughest question when it comes to trading. Should I buy this right now or should I wait for a pullback? And if I wait for a pullback, I might potentially miss out on this move. Okay, so this is the hardest part of trading. This is the most difficult. With NASDAQ, flip your red box green and you got an ignited bar opening above it right now. Okay, so it's still holding support. NASDAQ is holding. I'm focused on gold, guys. I'm watching this. So it came up. It's a lower high. Okay. If I look at those 3 body candles, you know where it was barcoding? I know it's going to be a lot of boxes and zones, but I want you guys to watch this area right here. See right here where we're trading in it, where there was a red body, green body right before FOMC opened and it dropped. We're trading right back in this zone. So I want to see if the sellers will reject it down, and maybe I could get a pullback buy in here. NASDAQ looks nice. Okay, so it's coming. Still, gold is still inside here. NASDAQ has a nice move. Okay, so it got up to that 125, that 5-minute level. The next 5-minute level is 150, and then remember the yellow is a point of interest up there at 155 if it fills this zone. If it needs to come back, if you're not in NASDAQ, pull back would be you're looking around the green box or in here for a buy. I'm still watching this gold. 3 minutes to go. I really would like to buy gold inside this green box. I would just like to see it come back down here. Questions are starting. Okay, thank you. Thank you, Brad. I appreciate that. Okay, so now FOMC, now there's he takes questions from everyone that's there. Sometimes he dances around the questions and will not answer them. He gives the political answers. Okay, so that's a big rejection. So if you bought on impulse. So I'm waiting it out to see, will it come down naturally into my green box here? NASDAQ looks nice. Okay, I don't know why I'm gravitated to look at gold. But we have a minute 50. We have a shooting star candle now. So it did break through there. But that's why I made this box here. Red, green, red. I want to see who will win this battle inside here. Election will have no effect on our decision, he says. Okay. It comes from the horse's mouth, if that's what he's saying. I don't think election, has anything to do with the interest rates. But it could just be talking points. What are you guys thinking for gold? What's your bias on gold? Do you think we short? Do you think we look for a buy? Or do we just continue waiting it out? What do you guys think? Wait? I'm waiting. Chop in this zone the rest of the day. I kind of want to see something develop. Yeah, I'm gonna try and wait for a pullback. Me personally, I'm trying. But here's the close. 10 seconds to go. Oh, here we go. So we're approaching the close. Remember that when we opened was a big bullish move on FOMC, then they rejected it back down. So we're still below FOMC's big powerful open. They closed it right below the box. Oh, okay. Get ready, guys. That's a big, oh shit. Here we go. Let's test now. There's a big wick coming up. Okay. Will it come down to our green box down here? Will it hold our green zone right here? Now we're getting, so see how they opened that? Red came all the way down, coming back up. Now volatility is here. Okay. So let's now see. Will it get respected down here? Will it come back? Now it's gathering volume. It's getting depth of market. It's hitting pending orders, stop losses, everything. So let's see. Maybe this will be our good clue candle. Okay, so I'm happy we waited because there was no real move above here, coming all the way back down, retesting down here. Will they sweep the low and grab liquidity here and turn it back up? Like, these are structural areas we have to watch. So I think we've seen a lot of everything this FOMC, and it hasn't really moved anywhere significantly. NASDAQ was a impulse move to right there. You know that red line. That's why I say, guys, use these as point of interest, that 25. And then they pushed it right back down. So this is a red zone. You got to flip it. I don't know. I'm wow. Okay. So let's see. They took out the high, coming back down. Now, right there at the bottom, did they break it? Holy, lots going on. They're trapping buyers. They might be trapping sellers. This entire area could be a trap. Okay, so I'm just going to try and clean up to the best of my ability. I was looking for a pullback buy in there, but that red candle negated that. Said, Ron, you're not looking for buys. That was a big, powerful candle. So what I'm doing now is maybe respecting the sellers now. For whatever Powell said or whatever happened in the market right now, pushing down. If it comes back up, I might sell now this area. Okay, if it comes back up, I might sell the pullback and place my stop loss above here. or it could close down here. I might be getting a possible sell opportunity down here, depending how it closes. This is, I know I'm talking a lot, guys, and I haven't even traded, but it's just, if you took a buy, if you didn't get out in profit, you're kind of in drawdown. If you took a sell and you didn't get out, you're in drawdown on that. So either you're holding buys or you're holding sells. I'm not in anything. So I'm just continuing to wait it out. US dollar is got a nice big bullish candle. But let's just continue. Like, what happened? Okay, so it took it down. They took out that previous 205 low, the first 5 minutes of FOMC. They took it out. It's coming back up. Will the green volume close above the green box? I haven't changed this green box yet. Just the volume broke and came back up. Maybe I'll buy the green box. Who knows? Like, I gotta let this candle close out. 90 more seconds go. NASDAQ came all the way down, red, right down to that green box and coming back up. It's still inside here. If NASDAQ closes below here, maybe the market will continue to sell. Now I see it took out the high, coming back down. Yes, thank you, Juanito, for bringing that up. We also have a new 15-minute candle opening in 1 minute. So take a look at 15 minutes to clean up all this garbage. And this is what we got so far. So it's still making lower lows, lower highs, lower lows. The 15-minute trend is still showing bearish. Same with the fives. Fives came down, they came back up, lower high, pushing back down, new lower low. Where will it close? Well, let's watch now the last 30 seconds. Look at NASDAQ too. Big rejection off of there. Okay, that's important. Make note of that if you're a NASDAQ trader. Will this reverse and come back up and go bullish? That could be a big liquidity grab. Same with gold down here. Okay, so Dow is, excuse me, Dow is coming back up. NASDAQ is coming back up. S&P is coming back up. US dollar has a wick. It's tough. Look at, and again, where it's going to close. Is it going to close right near the point of interest? Okay, there we close red. So it's still red box. Okay. Now it's coming back up green to retest. Will they come up green and push it down? To me, guys, this is not the greatest volume to be trading. I'm actually happy I haven't taken a trade in this because this is exhausting just watching this, let alone trading it. Oh, it might open up at power hour when Powell leaves. Yeah, you never, Vanita, you never trade a market like this. That's good. That's good discipline. This is why, guys, you don't gamble with these type of events. It's not worth it. Like tomorrow when we trade, the volume might be so nice, we're going to be like, what were we even wasting our time even looking at this garbage? Tomorrow for Friday, maybe the volume is going to be trending, making nice moves, retesting 50% of nice moving candles. This is to me is like cluster of garbage in here. When will we trade? Well, you can trade whenever you want. I'm not in a trade yet. I'm watching. Now we got again a nice big bullish candle. So now I see that they took out the low. Okay, so let's put pieces of the puzzle together. Let's not just worry about to take a trade, understand what's going on. This is what a lot of traders fail to recognize. They all want to buy, they all want to sell, but they don't know. They're asking because they don't know. That's why you're asking, because you have no idea. I have no idea myself, because I don't see any structure being created on either side to justify to go into a buy or sell. You got to understand, as a trader, you're going to have to go through this, and there might not be a trade. It's so different. Do you know how many years it took me to understand that concept? Me earlier, 20 years ago, I would be trading all of this. I would be hedging. I would have been in buys. I would have added sells, added another buy, added another sell. I would have been all over the place because I have no idea what's going on. But a more mature run over the years of losing and losing and losing taught me that this shit doesn't matter. This is just stressing yourself out. If I was not on this call with you guys, I would have walked away. 30 minutes ago, hour ago, I would have walked away. Would have went to the gym and came back and saw how things are trading at Power Hour, or later tonight, London session, pre-New York tomorrow, Friday Wall Street. There's other opportunity. If you want to trade this, that's your decision. You need to make it. I think you need to go through this, what I went through, to understand why asking should we be buying or selling is not the question you should be asking. The question is, what happened with this where they took out the low? What happened with this where they took out the high? What happened with this where it came down and coming all the way back up? NASDAQ looks like could be a powerful move, closing in 60 seconds. Again, let's see if it can take out, and maybe we can buy a pullback. Same with gold. If it can break through here, I'm going to flip the zone again to green. Maybe I'll buy a pullback. Efren, it takes a time, bro. It takes time. For some of us, it takes a long time to understand these concepts. But once you start to get it, Efren, you'll be like, I know what Ron is talking about. Now I understand. Believe me, it took me a long time to realize that. I'm telling you the honest truth. I don't want to come on here and say, well, I figured out trading right away when I started and became a multimillionaire and this and that. No, that's all bullshit. It took me 5 years to even make $1 out of these markets. First 5 years, I lost thousands and thousands of dollars. But I didn't know what I know today. So I look back at it and I'm like, oh, if I knew what I knew today and I started again with that amount of capital, I could possibly have a different story. But it didn't work out like that. Okay, so green body closed. Our zone, let's now just flip this one red to green. Our white line is still our FOMC point of interest. NASDAQ is taking off, so flip your red to green. If it comes back down, you might get a buying opportunity off of that green box. This is the breakout move on gold now. Okay, if it can break through here, I like the structure that's being built. This might be a feeler buy, and then I'm going to add on a pullback. Okay, I really want that pullback. I really want it. Oh, that I'm holding, guys. I really want to hit the trigger and go in, but I really want this buy inside here. But sometimes when you buy early, it'll come up and then it will come right back down to the pullback. Okay, so this is you have to decide this for yourself. I cannot tell you what to do here. See, sometimes you got to wait it out. But this is where I want to buy. I'm telling you guys, I want to have a buy inside this green box. But I might miss this opportunity because it might keep driving. But I'm watching. It came up there, got rejected, coming down. Can it come down? As soon as it came down there, picked up another bid, coming back up. I'm watching how it's building. Okay, so it came back down, coming back up. There might be a time and place when to take an impulse trade, but you got to watch how it's building. It's still building. Okay, I'm going to buy now. Okay, I'm going to go in on buy. This is a smaller buy. This is buy number 1. I really want to buy in this green box. So I'm buying right now as a feeler trade, smaller buy. I want to feel out what's going on up here, but this is where I'm going to add my normal position. Okay, so I'm in drawdown on this. Okay, but my target would be to go to the high of the day. See, I think I got in real early. My stop loss will be below here, and then I might add a position if it comes in here. And then this is where I'm going to add a bigger position than this one. Okay, this is just a feeler trade. I'm testing it out up there. I know I know it could possibly get rejected. That's why I went small up there. This is where I want to add the bulk of my position. Okay, it's a shooting star candle. Now it's coming into here. I want to see, can it find a wick at the white line or at the top of the green box? Can it reverse this candle back up? But even with this small trade, I still have a stop loss below structure. Okay, still respect that. Even if I get out on that, still I lose. It's a smaller loss, but I want to still stick with if that was a normal trade. I want to have my stop loss below structure there. Now it's coming into the green box. Oh, it caught me real early. Now I want to see. This is where I want to see if the buyers are for real on gold. Will they come in here? And then if this area fails and it comes down here, then gold could officially be selling. Okay, but this is going to be now the true test. Okay, so we got a wick. Okay, exactly right at that white line. Can we flip the candle? It's not a shooting star, it's a spin top. Okay. Okay, 60 seconds to go. I'm going to wait for this candle to close. Can it come back up here? Can maybe I get a buy on the next candle? I see that it retested in there properly, right at the white line, held. Okay, coming back up. The candle is going to close in 45 seconds. And then I also watch the last 30 seconds. I pay attention. Is the candle going to close spin top with red? Will it flip with a little bit of green volume? Will the buyers push it up or the sellers are going to push it into the close? Let's see. So it flipped now, green. Look at, we're virtually right where we opened. So it's an indecision spin top candle with 15 seconds to go. Now the sellers are bringing it down with the momentum back down into our green box. Will it pick up a few more pending orders in here? Okay, here's the close. Right down again. Okay, open green. Initially, it's ignited green. Can it come up? Okay, so it came up. Are they going to push it down? But remember, this candle opened ignited green. It's holding. It's filling. Okay, I'm adding a second buy now on that candle. So this one, I'm going to place my stop loss. This is my regular buy, guys, okay, not a feeler. So I'm putting my stop loss below this green box. Okay, I'm in two buys. One is the smaller one, my initial one, and this is where I'm going to target to take out this wick. Okay, that's my target, the wick, and then I want to see if we can drive up to that high of the day. So I'm in two buys on gold. One is a smaller feeler, and this one is a regular size for me. Okay, I like the ignited open in the green box, but we got to see this resistance. It's struggling here. It got rejected there, rejected there, rejected there, and again rejected. So I need some green volume to kind of close above here if I can get it. Again, it got rejected. So there's a lot of resistance here. So it's coming back down, but it's an inverted hammer now. Okay, so remember, it's still open with that ignited body. Okay, if I can get green volume to close above here, then we can build off of this structural area. That would be the ideal situation. If we can get green volume closing in this red box. Yeah, it could possibly sell too. I know some of you guys are saying you're looking for a sell and seeing a sell. I understand that too. I know. I can see it myself too. I can see it's again rejected, rejected. I understand exactly what you guys are seeing myself. But that's why I got to let this candle close out to kind of figure it out. But while you're in a trade, you're in a trade. You might be in a sell, I'm in a buy. There's the candle will dictate which direction it could possibly go in. And that's my maximum stop for this trade. Because if it breaks here, then it could open up the floodgates where it could drop. And I'm not going to risk any more. That's the maximum risk in this green zone. And I want to see if it can get up to that wick. I'll mark up that wick just so we can keep an eye on that FOMC high. And then to see if maybe it can get up to that high of the day. But before I can assume all of that, I need to see where volume will close here. NASDAQ is barcoding still at our green box. Green, red, going back up green. Okay, so NASDAQ looks bullish as well. Okay, that's maybe an FU candle on gold. See how they came down? They flipped it red. Now it's getting ready to maybe push down a little further, unless the buyers are still holding it where it opened, which they are. So those bids are still coming in. We have 90 seconds to go, but that was an opportunity where it could have flipped and turned into a shooting star and start to come down. So it's really testing right in here. But there is still some green volume still in there. It is trading in traffic. There's a lot of chop in here, but I'm hoping, like for the sellers, you guys are hoping that it comes down here to squeeze buyers out of here, because that's where our stop losses are. For buyers, we want it to break above here because sellers have their stop losses up here. So it's going to target either up here or down here. You know, gold is not going to continue to trade inside here the rest of this afternoon. So, but I like the way how it's been building off the bottom. I like this bottom. I like that liquidity grab down there. I liked how it closed up here. I like how we're still above 50% of the green candle. I really like how we're still controlling the FOMC point of interest. I like how this opened as an ignited bullish bar. So if I get stopped out, I'm still going to stand by my decision on being in a buy. I like the structure. I like how it's developing below. I'm not going to go back and say, oh, no, I'm owning up to this. Everything I talk about, I like the structure below. I can't control how much supply there is up here. That's not in my, I can't control that. I'm not bigger than a market maker. They control that. But I like this setup. Okay. Now 50% of that green candle. Oh shit. I know the chart looks real messy, guys, but 50% is like right around there, that red line. If we can still maintain and hold this, see it's ignited red, red, red coming down. If we can still hold this right there. No. So initially we didn't hold it. So now we got to rely on the bigger green box zone. Okay. But that was just 50%. I didn't use my Fibonacci tool to give me a zone. That's an ugly ignited red body candle engulfing all of our prior green volume. Okay. So this is holding supply. Now we got to test our green box or the white FOMC point of interest. Okay. And then this is where potentially I go into drawdown, coming down into here. Maybe it's too many red boxes here. Oh my God, it's 3 o'clock, guys. My wife is just messaging me. Are you getting the kids? 1 second, guys. I completely forgot that it's 3 o'clock. Yes, I will go in 5-10 minutes. Guys, sorry, I'm just texting my wife. I will probably be in this trade after this call. Okay, hopefully I get this hammer and get out of here. Okay, so I don't want to get in trouble. I forgot I got to grab kids today. If she didn't message me, I would have forgot that I have kids. And then you wouldn't see Ron on YouTube for a long time, or Zoom. Ron would be in shit. Let's go with this hammer candle. Come on, because Ron's got to go and grab kids. Let's take out this high. Okay, but it held our green box. So holding all technicals, there we go. If it starts to break here and get up there, this is where I'll reduce my risk and bring my stop loss. There we go. Come on. Guys, measure your move. Okay. There we go. That's 25 pips up to the previous F140. I'm going to break even right now. Okay. Break even on my bigger trade. I don't give a shit about the small one. Okay, I'm not even worried about the first one. That one was insignificant. That was a feeler. But that, if it comes up to a previous high, that's 40 pips. Could be a tweezer top high. We could break out further. But that's 40 pips, guys. That's beautiful. Hit the likes on the call because Ron has to get out of here in 5 minutes. I'm good up there. Like, that's, if we're continuing with this, if it closes above, we're going to flip this red box green. See how all of this held, all this structure. It was ugly, but let's not get too greedy up here, because that was a big move coming up here. We squeezed all of those stop losses. It didn't take out the FOMC high. Okay, so now it's still building 2 more minutes. But please, guys, go to at least a break even, and then I can sleep good tonight, knowing that you guys have no capital at risk. Here we go. Come on. Maybe I should tell my wife for her to go grab the kids, and I'll stay here till market close with you guys. So if we can break here, where's our next logical 5-minute right there? That high wick right there, 26.99 and 33 cents. You know, it's like a discount at Walmart from 2,700. There we go. Okay, I'm securing 80% up here. I'm getting, holy shit. I'll tell the wife to go grab the kids, and I'll buy her a spa package with this trade. Maybe keep the wife happy. It was a happy life. Okay, that's 45, 50 pips. I'm good. 80% out. The rest is at break even. The insignificant trade. Remember, I donate a coffee to the market maker so that I can buy my wife a spa package on the next follow-up trade. Okay, so you see what I tell you guys, I have to emotionally get involved in a trade. But that pullback in our zone, watch this video over, guys. FOMC point of interest held. Holy shit, we worked our asses off for this trade. 50 pips, guys. That's oh man. So you see, even looking for scalps, how it took an entire hour to figure that out. So patience, discipline pays off. Should I get my kids a Uber? Yes, I should. I should call an Uber to pick them up. They'll be like, what the hell is going on here? But guys, I don't want to get in trouble with the wife. I got to go. Okay, one thing before I go. Red to green. Please, guys, go through this. Red to green. Red to green. Figure out 50% of that candle. I can eyeball it real quickly, but let's continue with our theme with the Fibonacci. Open, close. 50% is right there, 26.96. Draw a white line if you have to, whatever color line, so you know where it's 50% of that big volume right there. Okay, so we got it. If you want to get your zone, use your zone. Get rid of it now. Now you know if it pulls back, this is 50% control of this big base candle. It's above structure. So if it comes down red, 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 but number one, remember the previous high FOMC wick, that's resistance. It might be support going forward. We might not even have to come down to our white line. Okay, so it's still pushing. We might get the high of the day. 70 pips for the high of the day. But look at all of the wicks in the past. Today, wick, 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 wick. If I draw a red box from all of these wicks, this is what we're trying to break right now. Sorry I'm talking so fast, but I got to get out of here. Look at right there. That was resistance. Okay, don't get too greedy, guys. Don't get too greedy. Appreciate these pips. Okay, that's it. Like, you can see the resistance. That's a triple top. 1 top, 2 top, 3 tops. Will it continue to go? I don't know. Maybe it will. That sounded like Vanilla Ice. Will it ever go? I don't know. Okay, I'm out of here. Dave, kids are waiting. I know. Look at Uncle Dave is telling me to go and pick up my kids too, because I'm going to get in shit with Dave and my wife. I'm out of here, guys. Please hit the likes. Whoever got that 300 like wins a free monthly subscription at SST. Guys, that I hope you learned honestly. This was a tough FOMC for gold. This was, look at the shit that we had to analyze, and look at that nice reward we got. Okay? If it continues to go, amazing, but please lock in a little bit, guys. I'm out of here. Tomorrow, 12 p.m. We'll see you guys for Friday. Have a great night. Join SST, guys. Do this with Dave. Do this with Shahab. Do this with all the snipers in Discord. Signals, setups, education, everything. Join us, guys. Have a great day. God bless everyone. We'll see you guys tomorrow. Thank you, guys. Appreciate all of you guys. But I got to get out of here because I'm going to get in shit.
Hey guys, good morning, welcome to the live session of Stocks Never Trading. My name is Dave, guys, my partner is Ron. Let's get down to business here, guys.
In on US 30, sell. Okay, I'm jumping in. Guys, that's a 100 pip drop. Yes, we caught it. Hey, guys, 200 pips, please secure.